Imagine looking at your bank account and seeing a balance that barely covers your monthly groceries, even though the house you are sitting in is worth over $1 million. This is the reality for millions of hardworking people in 2026. You have followed the rules, you have paid your mortgage every month, and you have built a massive amount of net worth on paper. Yet, you feel more stressed about money today than you did 10 years ago. You are what economists call house rich and cash poor. You are trapped in a beautiful, high-value prison made of brick and mortar. This is the middle-class equity trap, and it is the most significant reason why people who look wealthy are actually struggling to survive. Welcome to a deep look into the invisible ceiling that is stopping your financial progress. For decades, we have been told that a home is the greatest investment a person can ever make. Our parents and grandparents built their entire lives around the idea of owning a piece of land and paying it off as quickly as possible. In their time, that was a solid strategy because the world was different. But here in 2026, that traditional wisdom has become a dangerous trap. According to the latest data from the Federal Reserve, nearly half of the total wealth held by middle-class households is locked away in home equity. That means if you have a net worth of $500,000, around $250,000 of that is simply the value of the walls around you. You cannot spend your kitchen cabinets to buy gas. You cannot use your roof to pay for a medical emergency. And you certainly cannot use your backyard to fund a comfortable retirement. Unless you sell the house or take on more debt, that wealth is essentially dead. It is sitting there, growing at a very slow rate while the rest of the world moves forward. Let us look at the math that your bank does not want you to see. Over the last 50 years, the average American home has appreciated at a rate of about 4% per year. On the surface, that sounds like a win. However, when you account for property taxes, homeowners insurance, maintenance, and the interest on your mortgage, that 4% gain starts to disappear. In fact, after all expenses are paid, many homeowners are actually breaking even or losing money in real terms. Compare that to the S&P 500 index, which has historically returned around 10% per year. While you were celebrating your home value going up by $50,000, the person who invested that same money in the market saw their wealth grow twice as fast. This is the opportunity cost that is keeping you on a financial plateau. The problem is that home equity does not compound the way a brokerage account does. When your house goes up in value, you do not get more house. You just get a higher tax bill and higher insurance premiums. But when your investment portfolio grows, that growth generates its own growth. This is the power of compounding that the equity trap steals from you. By the time many people reach their 50s, they realize they have a massive net worth but zero cash flow. They have reached the wealth plateau where their progress stops because all their money is tied up in a non-productive asset. This is where the fear starts to set in. You look at your retirement age and realize that a paid-off house does not provide a monthly check. You still have to eat, you still have to pay for healthcare, and in 2026, those costs are higher than ever. Many people think the solution is to simply sell the house when they retire. But where will you live? If you sell your $1 million home, you still need a roof over your head. If you buy another home in the same area, you are just moving your trapped equity from one box to another. The only way to win is to downsize significantly or move to a much cheaper location, which many people are unwilling to do because of family and community ties. So they stay in the big house, struggling to pay the bills, while sitting on a mountain of gold they cannot touch. This is the definition of the invisible ceiling. Another layer of this trap is what we call lifestyle inflation. As your home value goes up and your income rises, you naturally want to improve your life. You buy nicer furniture, you renovate the basement, and you landscape the yard. Each of these choices feels like an investment in your home, but in reality, it is just more money being redirected away from your future and into your present comfort. By 2026, the cost of maintaining a standard middle-class lifestyle has exploded. The money that should have been going into your 401k or your brokerage account is now going to the contractor and the utility company. You are maintaining a lifestyle that matches your paper net worth, but your actual bank balance is telling a different story. You are performing success instead of building it. This leads to a psychological state of constant low-level anxiety. You feel like you should be doing better because you see the big number on your net worth statement. But every time you look at your checking account, you feel a sense of scarcity. This disconnect causes people to make poor financial decisions, like using credit cards to fund vacations or taking out home equity lines of credit to buy new cars. They are trying to unlock the wealth in their home to pay for their life, but they are doing it in the most expensive way possible. They are adding interest payments on top of an already strained budget. If you find yourself in this position, you need to understand that the rules of the game have changed. The path to true financial freedom in the modern era is not through debt-free home ownership. It is through liquidity and cash flow. Wealth is not what you own. Wealth is what you can access. If you have $200,000 in a brokerage account, you have options. You can invest in a business, you can cover a year of living expenses, or you can let it double over the next 7 years. If you have $200,000 in home equity, you have a piece of paper. You have to ask permission from a bank to use your own money, and they will charge you for the privilege. To break through this plateau, you must shift your mindset. Stop seeing your home as an investment and start seeing it as a controlled expense. The goal should be to minimize the amount of your total wealth that is locked in your primary residence. Some of the most successful investors in 2026 are those who chose to live in a modest home while funneling every extra dollar into productive assets. They are not worried about the local real estate market because their wealth is diversified across the global economy. They have reached the tipping point where their investments are now earning more than their day job. This is the level of freedom that the equity trap prevents you from reaching. If you are currently sitting on a large amount of equity, it might be time to consider a strategic move. This could mean downsizing sooner than you planned to unlock that cash. It could mean taking a home equity loan at a low fixed rate and investing that capital where it can actually grow. Or it could simply mean stopping all non-essential home renovations and redirecting that cash into the stock market immediately. The math is clear. The longer your money stays in the equity trap, the more wealth you are losing every single day. We are living in a time of rapid economic change and high inflation. In 2026, the safety of a paid-off home is an illusion if you do not have the cash to pay the property taxes. True security comes from having multiple streams of income that are not tied to where you sleep. It comes from understanding the difference between a static asset and a dynamic one. Your home is static. Your investments are dynamic. If you want to build exponential wealth, you must favor the dynamic over the static every time. Don't let the pride of home ownership blind you to the reality of your financial situation. The middle class has been sold a dream that has turned into a weight. It is time to drop that weight and start moving forward again. You have worked too hard to end up with a high net worth and a low quality of life. You deserve to have your money working for you, not the other way around. Break the cycle of lifestyle inflation and start prioritizing your liquidity today. The first step is simply acknowledging that your home is not going to save you. Only your deliberate, consistent investment strategy can do that. Look at your numbers honestly. Calculate how much of your wealth is actually available to you right now. If that number is too low, it is time to make a change. The invisible ceiling only exists because you are standing on it. Step off the plateau and start building a life of real, accessible wealth. Your future self will thank you for having the courage to see the truth today. Financial freedom is waiting for those who are willing to look past the brick walls. Make the choice to be wealthy, not just look wealthy. Start today and let the power of compounding finally take you where you want to be.